How the U.S. financial system works? Have you ever thought about how the U.S. banking system works? There are a lot of institutions, markets, and rules that make up the world's largest economy. In this video, we break them down. What are the most important parts of the system that keep it running smoothly? They could be banks, stock markets, the Federal Reserve, or rules about money. Come with us as we look at how the U.S. financial system works and how these parts affect the money choices you make every day. The financial system of the United States is a network that is both dynamic and complicated, and it plays an important part in the economy of the country. The movement of capital is managed and made easier by the implementation of a variety of institutions, markets, and rules that are included in this concept. This video is a comprehensive overview of the inner workings of the United States financial system, including its primary components and the purposes that they perform. The organization of the financial system in the United States. There are many different organizations, markets, and regulatory agencies that make up the United States financial system. These entities collaborate with one another to guarantee that the economy remains stable and operates effectively. At its core is comprised of various financial organizations such as banks, investment firms, insurance companies, and government agencies. Within the context of financial markets such as the stock market, bond market, and foreign currency market, these entities engage in interaction with one another. Managing and allocating capital, providing liquidity, and fostering economic growth are all functions that the system is intended to perform. Institutions of the financial sector. When it comes to financial organizations, banks are probably the most well-known entities. They are also responsible for creating loans, accepting deposits, and providing payment services, all of which are extremely important roles in the financial system. Individuals and businesses can take advantage of a wide variety of services provided by commercial banks like JP Chase and Bank of America. These services include checking and savings accounts, personal loans, and mortgages. It is the responsibility of federal and state agencies, such as the Office of the Comptroller of the Currency and the Federal Deposit Insurance Corporation, to impose regulations on these institutions in order to guarantee stability and safeguard depositors. Investment banks are financial institutions that specialize in assisting businesses in attaining capital by means of the issue of stocks and bonds. Additionally, they offer advice services for different types of mergers and acquisitions. Corporations such as Goldman Sachs and Morgan Stanley are examples of prominent companies. The Securities and Exchange Commission is in charge of regulating investment banks, and these banks are legally bound to adhere to a set of regulations that are intended to safeguard investors and preserve the integrity of the market. Insurance companies offer financial protection against a variety of hazards, including those to one's health, life, and property. Additionally, they are responsible for paying out claims and collecting premiums from policyholders. Companies such as State Farm and Allstate are also considered to be major players in this industry. The purpose of regulations imposed on insurance firms is to guarantee that they keep adequate reserves to fulfill their responsibilities and secure the interests of policyholders. Credit unions are financial cooperatives that are owned by their members and provide financial services that are comparable to those provided by banks. These services include savings accounts and loans. They typically offer more favorable interest rates and cheaper costs due to the fact that they are not-for-profit organizations. Credit unions are subject to regulation by the National Credit Union Administration, which is responsible for overseeing their activities and providing protection for deposits made by members. The markets for financial assets. For the purpose of facilitating the buying and selling of shares in publicly traded corporations, stock markets are designed to work. One of the most important stock exchanges in the United States is the New York Stock Exchange, while another is the NASDAQ. IPOs, which are short for initial public offerings, are a method by which businesses raise capital by listing their shares on these exchanges. When investors purchase and sell shares, they do so with the expectation of generating returns in the form of dividends and capital gains. The SEC is in charge of regulating the stock markets. It is responsible for enforcing laws pertaining to securities and monitoring trading operations in order to avoid fraud and manipulation. The foreign exchange market, sometimes known as Forex, is the place where currency exchange takes place. Currency exchange, often known as the foreign exchange market, is the largest and most liquid financial market in the world. Transactions take place around the clock. Financial market emotion, economic conditions, and geopolitical events all play a role in the fluctuations that occur in currency exchange rates. Establishing exchange rates and enabling currency conversion are two of the most important functions that the foreign exchange market performs in the context of international trade and investment. The regulation of financial matters. The United States financial system is subject to a significant amount of regulation in order to preserve stability, protect customers, and guarantee the integrity of the market. There are a number of important regulatory bodies that regulate various areas of the financial system, including the Federal Reserve, sometimes known as the Fed, is the central bank of the United States of America and plays an important part in the establishment of monetary policy. In addition to ensuring the stability of the financial system, it is responsible for regulating the money supply and determining interest rates. Aside from providing financial services to the government and other institutions, the Federal Reserve is also responsible for the supervision and regulation of banks. The Securities and Exchange Commission is the government agency that is in charge of protecting investors and regulating the securities markets. It is responsible for the enforcement of securities laws, the supervision of stock exchanges and brokerage firms, and the guarantee of fairness and transparency in trading operations. The function of financial markets in the United States economy. Markets for financial instruments are extremely important to the functioning of the economy because they facilitate the distribution of money and manage risk. They make it possible for individuals and institutions to borrow money, save money, and invest money using their platform. By facilitating the transfer of funds from savers to borrowers, financial markets contribute to the expansion and innovation of the economy. The financial markets make it possible for people and institutions to invest their savings in a variety of assets, including stocks, bonds, and real estate. Returns are generated by investments, which also contribute to the growth of wealth. On the other hand, savings are a source of capital that can be utilized for making future investments and engaging in economic activities. The financial markets provide a variety of methods that can be utilized for risk management and risk mitigation. For instance, insurance products shield individuals and organizations from the financial losses that can be incurred as a result of unanticipated occurrences. Options and futures are two examples of derivatives that give investors the ability to protect themselves against the risk of swings in asset values and interest rates. Price discovery refers to the process by which markets assist in determining the true worth of assets by utilizing the forces of supply and demand. Investors receive crucial information through this process, which is known as price discovery, and it also assists in the effective allocation of resources. The liquidity that is provided by financial markets enables investors to acquire and sell assets in a very short amount of time and at prices that are easily understood. These liquidity levels guarantee that markets will continue to function effectively and that capital will be able to move freely across the economy. Obstacles faced and potential future trends. A number of issues are being faced by the financial system of the United States, which is also undergoing fast change as a result of technology breakthroughs and shifting economic conditions. It is still difficult to guarantee that all people have access to the financial services that are available. A significant number of underserved communities do not have access to banking and credit, which hinders their capacity to participate in the financial system and attain economic stability. The proliferation of financial technology, often known as fintech, is causing a sea change in the landscape of the financial industry. Technological advancements such as blockchain, digital currencies, and robo-advisors are causing a transformation in the manner in which financial services are provided and utilized. Although these technologies have the ability to improve efficiency and cut costs, there are also issues over the control of regulatory agencies and the possibility for security breaches. In order to successfully address new risks and problems, the regulatory framework needs to undergo adaptation. There is a degree of economic uncertainty that can have an effect on both the financial markets and the economy as a whole. Some examples of global economic worries include trade conflicts and geopolitical dangers. The ability to negotiate these uncertainties is essential for policymakers and financial institutions in order to maintain stability and support sustainable growth over time. The financial system of the United States is a multifaceted and essential component of the economy. It is comprised of a wide variety of institutions, markets, and regulatory organizations. The flow of capital is facilitated, risk is managed, and economic progress is supported throughout the process. Through an understanding of the functioning of the financial system, one can gain significant insights into the role that it plays in shaping economic results and affecting the financial decisions that people make on a daily basis. In order to successfully navigate the always shifting financial landscape, it will be vital to maintain a level of awareness regarding the system's components and tendencies as it continues to undergo evolution. If you want to dive deeper into the complexities of the U.S. financial system and stay updated with insightful financial content, subscribe to our channel and hit the notification bell. Don't miss out on our latest videos that help you understand and navigate the financial world with confidence.